And we begin with that breaking news first at 6, and this affects every single one of us. U.S. markets tanked as Wall Street fled from risk and dumped stocks and commodities by the barrel. The sell-off came with renewed fears of a double-dip recession here at home, and stocks in Europe and China, they plunged as well following a weak readings on manufacturing in China and continuing anxiety over the fate of Greece.
At one point today, the Dow Jones Industrial Average fell more than 525 points. Now, a minor late session rebound prevented the street from logging its worst close of the year, but just barely. All three indexes were down more than 3% by closing bell. David Smith is the Chief Investment Officer at Rockland Trust. David, why did this happen today?
You know, Mark, Bob, I think what happened was we had 5 consecutive days last week of up stock market returns, which was the first time in quite some time that that's been the case. And the thesis then was that people were looking at the Fed and knowing that there was going to be some action taken. And so they were sort of buying on the rumor and perhaps selling on the news. That's one thing that's certainly been postulated. The second thing I think that was out there is this idea that when the Fed steps in is going to really stimulate the economy by moving those long-term interest rates down a little bit and allowing mortgage rates to come down, and perhaps the housing market will rebound a little bit.
All right, well, so you're seeing some good news then, but, you know, the official end of the last recession was back in 2009, mid-2009, and now we're hearing concerns that we might be sliding into a second recession or a double dip. Do you agree with that?
Well, certainly there's a concern of that, and I would say that the concern has increased recently. I think the fact of the matter is that the underlying problem in our economy today is confidence. And a shock like we've seen over the last couple of days does nothing to help people's confidence and make investments. Just this afternoon, I was with a client who runs a local business, and that client told me that he and his customers both are doing reasonably well, but they don't have any plans in the near term to invest in additional capital or hire anybody because they're uncertain about the future. So there is the underlying problem in my mind is a lack of confidence today.
And so that money stays on the sidelines. Now, what about the steep decline in the Dow? How does this impact all of us?
Well, certainly it scares folks. That's the most important thing. And I think when I talk to clients and prospective clients, I try to tell them, please do not make decisions based on your emotions. The natural, I think, the tendency for individuals is when they see something bad happen is to run away from it. In fact, great investors like Warren Buffett take opportunities like this to invest more money in the stock market. So we tell people, please don't panic, stick to your long-term strategic plans, and over time, things will work out to your advantage.
And fasten those seatbelts. David Smith, thanks a lot for joining us. We'll have much more market coverage just ahead at 6:30. Maria?